Welcome back. Well, the SGX Nifty is indicating that we'll have a gap up. Remember, this is a market which has been trading in a bit of a range for some time. 15,750 on the way down has been defended. 16,250 on the way up is a bit of a resistance. And it looks like we'll be very close to that resistance once we open with this gap up. This is, of course, in line with what the global markets are doing. The Dow Jones was up 650 points on Friday. Sudarshan Sukhani and Mitessh Thakkar now joining us. Good morning, Sudarshan. Gap up and at the higher end of the range. Now, how do you treat it as an expansion, breakout, or an opportunity to sell? What would be your index trade?
Good morning, Anuj. That's a very good question. See, the signs are this. On Thursday and Friday, the Nifty repeatedly tried to go down but found significant support at 15,900. On Thursday, it just went below that for a few minutes, but we'll ignore that. So 15,900 is being bought into again and again. Then we had the US markets. For 2 days, the US markets opened with large gap downs, and throughout the day, they recovered the down gap to close almost unchanged and then with some gains. So the trade is now to be on the long side of the market. It doesn't mean that the trend has changed, but we can have sharp, profitable bear market rallies. And the chances are we are entering one such period now. So this is, I would take this as a breakout trade. Now, the trade, but you can't actually buy after a 150 or 200 point rally. So be patient through the day. You will find either a significant dip or a trading range. That's when you should go long. Initially, you have to keep a stop because we don't know how the markets will open and where they will build that range. So start the stop with 16,070, but raise it up as much as possible. But be long. The Bank Nifty is an underperformer. But see, if the Nifty goes up, the Bank Nifty will do its own bit. So Bank Nifty is also a buy with a stop under 35,000. I would treat it as a breakout and expect higher levels in the next few days.
Okay, for those who are trying to understand why is Sudarshan's stop loss below the or above the levels where the Nifty is already trading, because it's factoring in the gap up. So 16,070 on the Nifty and 35,000 on the Bank Nifty will be the stops after the gap up. Mitessh, good morning. How are you going to approach Nifty and Bank Nifty?
Morning, Anuj. Other day, on Friday, we talked about the fact that the daily indicators and the charts are improving, and that could possibly suggest a retest of 16,250. But I think this time we might even cross it. So one, we have a lot of long position on the stock side. We intend to add on to them with the gap up. On the index, once the index opens, maybe if you get a dip in the first 30 minutes, you want to buy it. Otherwise, I would still want to buy into at least at the money call options for the July expiry. So I want to trade long. The idea of buying into options or futures will depend upon how much of a gap do we get post the opening 180, 185 points, which the SGX is indicating.
Okay, why don't we talk about individual stocks then? Sudarshan, good morning. What would be on your list today?
Yeah, good morning. It's mainly buying, Sonia. We start with Bajaj Auto. That's been an outperformer, very strong relative strength versus the Nifty. It's on the verge of breaking out from a 3-month trading range. Whether it breaks out or not is a different matter, but it's worth buying into. So buy Bajaj Auto with a stop under 38.60. Hindalco remains my only and favorite short position. Metals should underperform. So Hindalco is an intraday short with a stop above 358. Hind Petro is an interesting idea for a buying opportunity. The stock has finally moved up from a long trading range. It does suggest that the breakout is imminent. I would buy that with a stop under 236. And finally, my best pick for the day is Reliance. Reliance has been in a very, very narrow trading range for the last 10 days. It's quite possible that we will be seeing a willing breakout in Reliance on the upside. So Reliance is a buy with a stop under 23.85. Although personally, I would just buy it and hold it if the stop is triggered. But for traders, there's a stop loss.
Okay, for traders, there's a stop loss. And Sudarshan says even if it's triggered, he will still keep it as an investor. But Mitessh, what about your stocks?
So I have all buy lists as well. On the names on the buy list are Titan is a buy with a stop at 21.65 for targets of 22.50. L&T is a buy with a stop at 16.64. 16.64 for targets of 17.45. Britannia is a buy with a stop at 38.20 for targets of 39.60, and Bajaj Finance is a buy. It's a conditional buy, but I think with the gap of that level of 59.50 will be crossed early in the day. So buy then with the stop below 5900 for targets of 6100.
Okay, thanks for those calls. We'll come back to you at around 9 a.m., 9:10 to take the 9:10 calls. Well, the RBI on Saturday released the July bulletin, which is a bit unusual. The bulletin is usually released on weekdays. The bulletin is, as always, has a detailed report on the state of the economy. Lata has spoken to a source on this piece, and she is here with the key takeaways for the forex market. So, Lata, like we were discussing, 80s looks like, at least for the near term, some bit of level where, they want to have.
That may be the reason for the release of the
Yes.
State of the Economy report on the weekend.
On the weekend.
To, tell the market what the Reserve Bank thinks, probably. I mean, that the source implied that the State of the Economy report is to be taken as a communication to the FX markets. And the communication is pretty clear. It goes on to say that the economy is resilient despite the geopolitical situation and despite the tumult in the currency markets. It says that the exit, it doesn't even say exit, it says a stampeding out of portfolio investors against a terribly strong dollar is affecting all EMs, but markets are differentiating between currencies based on the size and speed of monetary policy action. And it goes on to say that India's monetary policy has been on the front foot, which has resulted in inflation being on the back foot. It says that inflation has peaked off in April itself, and May and June, the numbers have been falling. And the rupee, therefore, although it is wilting, it is actually been shored up. It's doing better than other emerging market currencies because of the strong reserves, because of the moderating external debt, and because, and this is very important, because of a fairly valued real exchange rate. This is important because there are some people who think that the rupee is overvalued, and the RBI statement that it is a fairly valued exchange rate means it is likely to defend that. And after all, we did see that in the first week of July, the RBI data indicates that $6.6 billion were spent by the central bank. That is the extent to which currencies went down. The report also has a detailed set of data that global inflation also may have peaked off. It's pointing to falling commodity prices, the series of tightening by several central banks, and the food FAO food index, which has been falling, the Bloomberg commodity index falling. So it gives a bunch of data on how global inflation has also peaked off. But the central point, I think, is that rupee is fairly valued and our inflation is peaking off versus the US position.
All right, Lata, thanks very much for that. So that's the communication from the RBI over the weekend. Though in the very near to medium term, the dominating driver perhaps remains the direction of the US dollar. And, on Friday, we had some good news. The dollar was a big global underperformer. I mean, it fell against pretty much everything after a very sharp rise. So perhaps some relief later when we open. I mean, not later, in 3 minutes from now.
Yeah,
Sorry.
Actually, exactly what I was going to say.
Yeah.
Today, crude, dollar index, the performance of equity markets are all going to be risk on for the rupee as well.